Imagine having a blank check written for you. That's the business model of a Houston-based company helping to take energy infrastructure and now even crypto companies public through SPACs. Joining me now is the founder and CEO of Dynamix 3, Andrejka Bernatova. Andrejka, welcome to NYSE Live.
Thank you for having me.
So let's just get into SPACs. For someone who may not be familiar with that concept, someone who's just learning about the industry, what is a SPAC?
So in simple terms, actually, SPAC is essentially a blank check vehicle. So it's a company that raises cash via public markets, public investors, and then uses that vehicle to acquire another business. So our sole purpose is to acquire another business that already has operations, and that enables that business to go public faster. So we essentially enable businesses to go public faster than they generally could.
Okay, so you've completed multiple successful SPACs, mostly in the energy space, but can you talk about this new SPAC with the Ether Machine? Why did you decide to focus on crypto?
So SPACs can be opportunistic, and so we look for companies that are in our space or generally tangential to our space. We have recently announced a transaction and merger with the Ether Machine in July of this year. And essentially, we looked at the digital asset space in similar ways that we look at the energy and infrastructure space, essentially an extension of assets going into the next decades, a number of decades that are going to drive consumers as well as commercial businesses. So many differences, energy and infrastructure versus the digital asset space, but also many similarities. There's essentially underlying commodity. There is a high technology component, the importance of high skilled and experienced management team, and also the need for extensive capital in order to grow the business. So those are many of the similarities that we can actually introduce into the business via energy and infrastructure.
Well, that was interesting because I know that you mentioned that you see a lot of similarities between digital infrastructure and energy infrastructure, which can you elaborate on that?
The interesting thing about those two segments is both of those actually drive the growth of AI. And so when you look at AI and data centers, and you and I, and at least I'm addicted already to AI and other ChatGPT and other AI agents. And so in order to fuel sort of this AI addiction that our generation and generations below us are driving, you need two things to enable that. One is energy to power AI training facilities and data centers. Two is you need the trust, which is really happening on blockchain, and Ethereum, and Ether is part of that component, is a major driver of that. So trust and energy, and we actually work in both of those segments.
Incredible. So this is your fourth SPAC. Which lessons from previous SPACs are you applying now as you work with or in Dynamix 3?
So we actually recently filed for our third SPAC. This is our third vehicle, filed with the SEC, Dynamix 3. The lessons learned are it is not easy to execute on a high-quality SPAC transaction. Most SPACs actually never consummate a transaction in the first place, and the ones who do, they're generally, sometimes there are companies that are earlier stage. And so what we focus on is companies that are either backed by real assets or real operating businesses. It's critical for SPACs to merge with companies that should be public in the first place. It's not too early. They should be public in the first place, and you just enable them to go public faster in a more efficient manner. So lessons learned is make sure you have the right target company that you want to merge with. The second is you need to have the right balance sheet where you can really get the company started on the right terms and not have sort of poisonous balance sheet structures. So very critical. And you need to have the right people around the table. So experts in the field that can really help enable the company not only to be public and become public, but also to be a high quality, ongoing public business in years to come.
All right. And we just have like a few seconds left. Anything else you want people to know about SPACs?
SPACs need to be used in the right way for the right company, and at a time where there is demand from investors for that industry. It's critical. So it's a product that works, but it has to be in the right hands to make sure that it works well.
All right, Andrejka Bernatova from Dynamix 3, thank you so much for joining us at the New York Stock Exchange. That's going to do